Hi everyone. Today we would be starting with a new series known as technical analysis. We will start with the basics of technical analysis and go through a lot of different ways, different charts and different methods through which technical analysis is done. So let's start with technical analysis. Let's start with how to look at stock market in lieu with the technical analysis. So stock market is what technical analysis says is, or how technical analysis exactly is done is, the stock market is taken as one of the most complex mathematical problem to solve for the technical analysis. And whatever news fundamentals which are there in the company will get reflected in the price itself. So any mathematical calculations or anything which will be indicated by the price itself, could be will take care of any news, any fundamentals of the company, whether there's a profit, there's a future scope of profit which is going to happen, or anything which is going to happen. There's a big news which is coming up. Technical analysis says that everything will be handled mathematically. So this is what exactly the technical analysis is all about. So here we would just be, there's also one more analysis which is done apart from technical analysis, which is known as fundamental analysis, that how fundamentally strong or weak this particular stock is. We won't be talking about fundamental analysis for now. For today, we would be talking only for this series of lecture, we would be considering only the technical analysis. And then in the next series, we would be considering the fundamental analysis part. Now, this series is going to be a bit long. So technical analysis will go on for say 15, 20 days or 30 days or so. Okay. Now, I don't know why my slide is not moving. Okay. Okay. So now, so there are few laws which I have created, few, I would say precautionary laws which I have created for technical analysis. Which says that there is no set formula. So this is based upon my experience. You have to be cautious and you have to consider these laws while doing any technical analysis. That there is no set formula. If someone is saying that, this is the formula through which I made 25 lakhs, I made 1 crore, just bullshit. You just block that particular channel. Even if I say so, block that particular, block my channel as well. There's no set formula for technical analysis. It's all maths and logic, which helps you analyze a particular stock and make a educated guess. So there's no set formula and everything works and nothing works. So for example, for a particular stock, you might see that one particular method of technical analysis is working, but the same method for the second stock or third stock, it might not work. So everything works, but as such, nothing works. It's your analysis that you have to do, where you can come up with your own ideas, with your own techniques, using the set of rules that you have. So to give you an example, it's not like you say that, okay, then why the hell are we learning technical analysis? If nothing is working, then why should I, even learn about technical analysis? Okay, let me tell you why you should learn. So for example, if you're from programming background, you will know that there is if and else statement, which is used from which you can create your own if else statements. Now, if I say that, if else statements, by using if else statements, you can, make a very strong AI algorithm. Is that true? It's partially true. If you don't understand how if else statement works, you won't be able to build conditions which might work as a, as a very strong say AI algorithm or some conditional algorithm to say. So why I'm saying AI algorithm? Because AI algorithm is nothing but thousands and thousands of if-else statements, even lakhs of if-else statements, where the computer makes decision based upon, its weight and everything, that, okay, which neuron should I fire and which neuron should I not fire. Under the hood, it's not actually exactly if else statement, but if you look at it, it's basically if else statement where it is consistently making decision that, okay, if this is the case, then, and if this is the case, and if this is the case, and if this is the case, then, output this. So that's what it's doing. So if you don't understand the if else statement itself, you won't be able to apply it to your any, you won't be able to create any sophisticated algorithm on top of it. So the technical analysis is nothing but the building block to that complicated algorithm that you want to create for your own use case. Okay. Then, of course, there are around thousands of technical parameters to analyze. We won't be analyzing all of the parameters. We won't be going through, we won't be making khichdi in our brains. Whatever is essential, we will learn it. We are not here to PhD stock market or, learn economics. We are here to generate profits. So there are thousands of parameters which are used for technical analysis. We won't be learning thousands of them. We would be learning whatever is important for generating profits. Now, with that being said, you don't have to learn anything by heart. You just need to understand the maths behind it. You just need to understand, you just need to be an open-minded person. You need to understand the logic, the maths behind it, and then see, okay, how can I apply this maths to generate profit? That's it. You don't have to mug up. You don't have to, learn any of these algorithms, any of, what I'm teaching you. Nothing you don't have to learn. You have to just apply logic that, okay, what is the logic behind this guy saying that, okay, what this particular thing is. If you understand the maths, if you understand the logic, if you apply your brain, then this will be a very easy, it would be a cakewalk for you. Now, always check your ego. Don't always, don't always say that whatever algorithm that I have applied, I'll generate 100% profit. No, that's not the case. Even not me, even Rakesh Jhunjhunwala, even people like, Vijay Kedia or people, very, very big names, even they make losses. You have a look at Rakesh Jhunjhunwala's portfolio. His portfolio has dropped down to, he has made 35% loss in year 2022. So it's not that, even people who have hundreds of crores in market, thousands of crores in market, even they lose their portfolio, even they make losses. They make 35% losses, 40% losses, even 50% losses. But ultimately, in a long term, they are generating wealth and they are earning profits. So always keep a check on your ego. Don't say that, you'll be 100% right all the time. No, that's not possible. It's not end of the world. If you have made loss, okay, no problem. Book the loss, move on. It's not end of the world. So these are some of the points which I want you guys to ponder upon. And something which is very, very, very important. These are not investment advices. Please do your own due diligence and please use your own techniques, use your own brain, use your own logic to make your own selective decisions. Okay, with that being said, let's start with the very basics of the technical analysis. Okay, so let's quickly go through the exchanges that we have. So there are basically two exchanges. Exchanges are nothing but basically where you can trade the stock, just like some dalal. If you want to buy Infosys, you don't directly go to Infosys head office and say that, hey, I need 1,000 shares of Infosys. You have exchanges in between, which help you, which create a platform for you from which you can buy and sell the share. And even these exchanges have brokers such as Zerodha, Upstocks, etc., from which you make account and you buy the shares, buy or sell the shares. But majorly, there are two types of exchanges which are there. We are not talking about brokers. We are talking about exchanges in India. So these are BSE and NSE. BSE is Bombay Stock Exchange. NSE is National Stock Exchange. Sorry. So BSE has around 5,200 plus shares listed on its exchange, and NSE, National Stock Exchange, has around 200 plus shares which are listed on its exchange. And there's something also known as future and options. There are around 190 plus shares which are listed on as future and options in National Stock Exchange. What are future and options? We'll understand more as we progress. But for now, you can understand, you can even YouTube some other YouTuber videos, and you can see that, okay, what future and options are. Many people have explained it in a very, in-depth way. I'll just skim it through because that's not my intention to make you understand future and options or BSE or NSE over here. My agenda over here is to make you understand the technical analysis terms. Okay. So these are basically the charts. Even if you go to any, I usually use Zerodha. So all my screenshots and all, whatever you will see, you'll generally see Zerodha coming up in the screenshots. So this is basically a chart of how stock moves. Stock never moves in one direction. It always goes up, goes down, then goes up, goes down. So this is how it is known, and this is known as a candlestick chart. What is a candlestick chart? Candlestick chart is nothing but a collection of candles. Now let us understand what exactly a candle is. You see a lot of red, green, red, green, red, green, and lines on this, right? These are known as candles. So now we'll understand what exactly candles are. Okay. So basically, there are two types of candles. If you have a look, all this graph, you'll basically see only two types of candles. One is your green candle and other is the red candle. So now the green candle is known as bearish candle. Remember, during my first video, I told you what a bear and what a bull is. Can anyone tell me, Aisha, what a bear and what a bull is?
Bear is when the market is going up, and bull is when it is going up. Yeah.
Bear is when the market is going down. Bull is when the market is going up. Even look at the even look at the candles, Aisha. You see green candle. Green means always correct, right? Red is always precautionary or something which is, it is generally indicated as something which is wrong or something which is, you have to be very cautionary about it, right? So bear, why bear is known as, when the candle is going down, why it is known as bear? Because I told you, right? The bear always attacks by using its paw. So it pushes its enemy down, right? So therefore, it's a bear. It's a bearish market because it's pushing it down. And how does a bull attacks? A bull attacks with its horn. So it always pushes upwards. So that's why it is known as a bullish candle, that the market is currently moving upward. It is pulling up, so therefore it is bullish. And bearish means it is attacking with its paw, so it is going downwards. So therefore it is known as a bearish candle. Okay, make sense? Okay. Okay. So basically, this is bearish candle and bullish candle. Now, let's also cover one more point. I don't know why I didn't add that slide, but okay. Let's quickly have a look at. Okay, we'll continue it in next lecture. We'll continue it in tomorrow's lecture. Okay. Any questions, people?